In the last video, we have learned the treatment of subscription. In this video, we'll learn how to solve a problem on income and expenditure account and balance sheet. Let us see how to solve the problem. Here is the receipt and payment account given of Mangalore Cricket Club as on 31st March 2018. First, we'll take up all the receipts, then the payments, then the adjustments. But remember one basic. What is to be taken in the account and what is to be taken in the balance sheet? We have learnt in the earlier videos. Capital and revenue items. What is a capital expenditure? A expenditure is said to be capital in nature if it fulfills any one of the three conditions. Number one, a new asset comes into existence. Number two, improvement to the existing asset. And number three, discharge of fixed liability. If any one of the condition is fulfilled, it is capital expenditure. Capital expenditure is to be taken in the balance sheet as an asset. Because when you purchase asset, it's a capital expenditure. Asset purchased in the balance sheet. If it is a revenue expenditure which is not capital, then it comes in income and expenditure account. Same for receipts. What is a capital receipt? A receipt which is non-recurring in nature, like legacies, life membership fees, special donations, etc. Capital receipts are to be shown as liabilities in the balance sheet. If it's a revenue receipt, we take it in the income and expenditure as an income. So remember, each and every transaction we'll discuss, whether it is capital or revenue. But you remember, if it is revenue, we enter in the account. If it is capital, it is to be entered in the balance sheet. No capital item will be taken in the income and expenditure account. Income and expenditure account, as we have learned earlier, all the entries are to be taken. Received, receivable, paid, payable, all the entries except capital items. Let us check up the transaction. The first in the account, donations received 60,000. Donations. Have they mentioned what donations are those? General donations or specific donations? Because if they are special donations, we take it in the balance sheet. General donations, we take it in the account. But general donations, we need to classify in two parts. What two parts? If the donation is of small amount, that's going to be a revenue part. If it is of huge amount, that will be capital. Now here, what is the amount of donations? 60,000 is not a small amount. It's a huge amount. So that is taken as, though general donation, it will be taken as a capital item. Capital items, we take it in the balance sheet. Now before we enter that in the balance sheet, let us show the capital fund surplus and then we'll enter the items here. So we'll show in the balance sheet capital fund, add the items surplus which we get in the account, and if any capital receipts, we'll show it as a liability. If there is deficit in the account, we have to minus. We'll see that as we proceed further. So now donations as we got, it's a capital receipt. We'll take it under the head of capital receipts. Under the head of capital receipts, we'll show it as donations. The amount 60,000 we will take in the inner column. Inner column, so the total we can take in the outer column. Fine. After donations, the next what we have is tournament fund, 22,000 rupees. Now the question is, tournament fund received, is it recurring or non-recurring? Is it capital or revenue? How many times will receive the tournament fund? For that tournament, we receive the fund only once. For the next tournament, we might receive a new fund. But for that particular tournament, we receive the fund only once. What we receive only once will be taken as capital. Capital here, this we don't take it as a capital receipt under the head of capital receipt, because tournament fund, there is a purpose behind it, and the purpose is to be recorded separately. It is a capital receipt, but will record separately here as something called as special fund. In this special fund will enter amount will take in the inner column. Why in the inner column this amount? See the payment side of the account. We have on the payment side tournament expenses. How much fund we have received? From that we'll minus the expenses. Remaining is the fund amount which we'll take in the outer column. We'll take that when we move on with the payment side. That is the reason why we have taken this fund amount in the inner column. Fine. What is the next in the account? Life membership fees. Learned already. What is life membership fees? The membership fees that is received from the members only once. We don't receive it again and again from that member. From that member we receive the fees only once. What we receive once is nothing but a capital receipt. Capital receipt in the balance sheet. Let us enter life membership fees. Rupees 5,000. Next, after life membership fees, entrance fees. Entrance fees may be capital or may be revenue. That will be mentioned in the problem. Whether it is capital or revenue. If the problem is silent about that, we assume that it is revenue in nature. And we'll take it as revenue receipt in the account. But here in the problem they have mentioned that entrance fees are capitalized. Since they are capitalized, we'll take it as a capital receipt. Entrance fees. Rupees 1,000. Next, fees from function. Functions are conducted by the cricket club or by any NPO again and again. They don't conduct the function only once. It may be annual function or half-yearly function, whatever. So whenever the function is conducted, fees are collected. So fees are collected again and again. It becomes a recurring income. Recurring means revenue. Revenue will enter it in the account. In the account as an income. Fees from function. Fees from function 24,000. The last receipt. Subscriptions. What are subscriptions? The annual membership fees what are received by the organization from its members. We call it as a subscription. Annual membership fees. That means from the members we receive the fees every year. Again and again. So what a receipt is that? Capital or revenue? Revenue receipt. We'll enter that in the account. Subscriptions. Subscriptions 10,000. We'll take it in the inner column because maximum number of times there is an adjustment on a subscription. So if there is an adjustment, that can be adjusted there. So we'll leave some couple of lines for the adjustment to be done. Let us check up the payments now. The payments, if it is recurring or say if it is revenue expense in the account, capital expense in the balance sheet, tournament expenses here. Already the fund is taken, 22,000. Of this fund, 10,300 is the amount that we have spent. Let us minus it from the fund and remaining amount will show it in the outer column as the remaining fund balance less tournament expenses. Rupees 10,300 will minus this and show 11,700 in the outer column. Next, furniture. It is a receipt and payment account. On the payment side, furniture, receipt and payment account means what? Nothing but a cash account. Where there is flow of cash, we record in the account. Furniture is on the payment side. That means naturally it is furniture purchased. Furniture purchase means what? A new asset comes into existence. Capital expenditure. So where that is to be entered? In the account or in the balance sheet? Capital expenditure in the balance sheet. Furniture 15,800. Since it's a capital expenditure, we have shown it in the balance sheet. The next, sports equipment. Nothing but sports equipment purchased. Sports equipments purchased. Equipments is nothing but an asset. When you purchase the equipment, we say that a new asset comes into existence. So we'll take it in the balance sheet because it is a capital expenditure. Sports equipment. We'll take it in the inner column because on that we have a adjustment. You can see the account. You can see the account. There is a tick mark given against sports and equipment, which indicates that on that we have adjustment. We'll take it in the inner column. And below that, leave one line. So what adjustment is there? We can adjust it. Next, honorarium. Honorarium paid is nothing but remuneration paid to the managerial persons. Nothing but salary paid. Will you pay the honorarium, the salary only once? No, we pay it again and again. Is it a capital expenditure? By paying honorarium, by paying salary, does a new asset comes into existence? No. Is it improvement to the existing asset? No. Is it non-recurring expense? No. It is not a capital expenditure, we take it as revenue. Do we have a tick mark against it? No. That means there is no adjustment. We'll take the full amount, 14,000 in the outer column as the expenditure. Honorarium, entire amount 14,000 in the outer column. Next, other expenses 6,000. Other expenses nothing but has to be revenue. Do we have a tick mark against it? No tick mark. We'll put that in the outer column. Other expenses rupees 6,000. Followed with the next, printing. Printing expenses 1,200. Capital or revenue? Revenue, because printing expenses, stationery, postage are incurred again and again. Revenue in the inner column. But do we have a tick mark in the account? Yes. So what does that indicate? It has a adjustment. We'll take a printing in the inner column. Amount of printing 1,200. Leave one line to do the adjustment. Next, rent. Rent paid. We pay the rent monthly. Monthly what you pay is paid again and again. A revenue expenditure will be taken in the account. Do we have a tick mark for that? There is no tick mark in the account. That means no adjustment against it. We'll take it straight away in the outer column. Next, salary. Capital or revenue? Revenue, because that is paid again and again. Recurring expense. But do we have a tick mark? Yes. That means there is some adjustment on salary. We'll take salary in the inner column. Salaries 7,000. There is a tick mark. We'll take salary in the inner column. The next, postage. Postage, stamps, again a revenue expenditure. Revenue expenditure, we have to record it in the account. Do we have a tick mark? Yes. That means it has adjustment. We'll take it in the inner column. Postage, rupees 330. And immediately leave a line. After postage, fixed deposit in bank. The money, 30,000 rupees what money we have deposited into bank as a fixed deposit. What is it? A revenue or capital item? When you make a fixed deposit, that is an investment. And when you make the investment, we say that a new asset comes into existence. So that has to be your capital expenditure. Capital expenditure in the balance sheet, rupees 30,000. Fixed deposits, 30,000. The last item on the payment side, cash balance. This is as on the closing date. As on the cash is an asset. Assets as on the closing date, will show it in the balance sheet. What is the amount of that? 4,770. We'll show it as cash balance or cash in hand. 4,770. Once we are done with this receipt and payment account, we'll take up the adjustments. Let's see the first adjustment. Expenses outstanding are Salaries and printing. First we'll see salary. How much is salary outstanding? 2,500. How much salary already we have paid? 7,000. Outstanding salary means what? Still we have to pay 2,500. Paid 7,000. Still to pay 2,500. So total salary 9,500 to be shown in the account. Let us see how to record that. Salary is what you have taken in the inner column. Add outstanding salary 2,500. In the outer column 9,500. What is salary? Expenditure. Expenditure is outstanding means what? Asset or liability? Liability. Because when we have to pay the expense, that's our liability. What we have to pay is a liability. It's a liability, we'll show it as a liability. Outstanding salary 2,500 rupees. The same adjustment says printing expenses are outstanding worth rupees 1,000. How much printing is taken? 1,200. We have paid 1,200. Still we have to pay 1,000. Total printing 2,200. We'll show it in the account. Here. Add. Outstanding printing. Rupees 1,000. In the outer column 2,200. Printing is an expenditure. Expenditure is outstanding. Receivable or payable? Payable. Asset or liability? Liability. So below outstanding salary, let us show that outstanding printing or printing charges. Rupees 1,000. Let us take up the next. Subscriptions due for 2017-18 are rupees 2,000. Subscriptions due means subscriptions outstanding. How much subscriptions we have received already? 10,000. 10,000 we have received. Due are 2,000. That means still we have to receive 2,000. Received 10, receivable 2. Total 12,000 will show it in the account. We'll add outstanding subscriptions. Outstanding subscriptions for the current year 2,000. Total subscriptions 12,000. Subscription is an income. That income is outstanding. Outstanding income means what? Payable or receivable? Receivable. Receivable is what? Asset or liability? Asset. We'll show it as an asset in the balance sheet. Outstanding subscriptions. Rupees 2,000. Let us take up the third adjustment. Sports equipment as on 31st March 2018 were valued at rupees 25,100. And what is that postage we'll see afterwards. How much is the value of sports and equipment as on the closing date? 25,100. How much is the value we have shown in the balance sheet? Opening value is how much? 30,100. Opening value 30,100. Closing value 25,100. The value of asset has decreased. The value of asset decreases only because of depreciation. It decreases by how much? 5,000. That means on sports equipment for the year, depreciation is 5,000. Let us record the depreciation. Depreciation is a loss. Depreciation on sports equipment. Opening value minus closing value. How much is depreciation? 5,000. Every adjustment will be posted twice. 5,000 depreciation means decrease in the value of asset. Let us decrease your sports equipment. In the outer column 25,100. Now the question is, when the amount is given 25,100, why to show that 30,100 minus depreciation? Why not directly 25,100? That is not to be done. Why the value reduces? That reason is to be shown. Opening is so and so. After minusing depreciation, the value is reduced. We get the same what is given in the adjustment. So this method is to be done. Same adjustment says what? Postage stands on hand On hand means the closing stock of stamps. This is the stamp that on hand 100 rupees as on 31st March 2018. How much postage stamps we have purchased? 330. Of that 330, 100 rupees stamps are remaining. That is a stock. Stock means what? It's an asset. Have you used full 330 when 100 rupees stamps are remaining? No. Out of 330, 100 remaining. So stamps used are only 230. Expenditure in the account should be 230. How much we have taken? 330. Let us see how to adjust that. So stamps used during the year are only rupees 230. Stock is an asset. Asset in the balance sheet. We'll show it as an asset. Stamps on hand, rupees 100. The last adjustment, outstanding interest on fixed deposits, rupees 4,500. Fixed deposit is our asset. On the asset, when we receive the interest, naturally that is our income. So first, interest income. Do we receive only once or every year? Every year. So that cannot be a capital receipt, it has to be a revenue receipt. First, we'll enter it in the account. Outstanding interest on investment. Outstanding interest on fixed deposit, rupees 4,500. Interest is income. Income is receivable. Receivable is asset or liability? Asset. We'll show it as asset. Outstanding interest on fixed deposit, rupees 4,500. Now, that's all with the adjustments. Let us balance the accounts. Now check out which side total is more. The total on the credit side is more. The total which is more, we write on both the sides. Let's see how to balance it. So the total credit side is more, we have written on both the sides, 40,500. From this 40,500, we'll minus the debit side. 14 plus 6, 20, this is 24, this is 33 and 5, 38, this is 39, 39, 200 and 230, 39,430. When you minus from this, the balance comes to 1070, 1070 is the balance. Now the question is, what balance is this? Is it a debit balance or a credit balance? Credit side total is more. Credit balance. Credit balance means what? Deficit or surplus? Surplus. Incomes are more. It has to be a surplus. So let us record that as surplus. Surplus will carry forward to the balance sheet. 1070. There is no capital fund given as they have started in this year. Opening capital has to be nil. Capital receipts will total all this 65, 66 and this 1000. What we get is 67,070. Now we'll total the balance sheet. Total of liabilities 82,270. Assets also must be same. 82,270. When you balance it, you find out that the total is same. Balance sheet should tally. This is how we prepare income and expenditure and balance sheet, for which we require capital and revenue bifurcation very neatly. In this video, we have solved a problem on income and expenditure account and balance sheet. In the next video, we'll solve one more problem on income and expenditure account and balance sheet. Thank you.